So you're looking at those jobless claims. With that in mind, what's your WEX word of the day?
Yeah, it's jobs. Absolutely. I actually think that the initial claims numbers today, it's the actual most important data point, I think, because last week was such a surprise to the upside at 261,000 initial claims. So people are looking for 250,000 today. And I never really put too much emphasis in 1 week's worth of numbers, but the numbers have been gradually increasing, up about 10% off the lows. So want to keep an eye on this because this has been the one part of the economy that has been resilient, which has helped the consumer, which has helped higher wages. So we're going to pay a lot of attention today to these numbers.
All right, so you're paying attention. Is that going to give you some insight into the markets or maybe the Fed's decision? What's the insight that you're going to get from it?
Yeah, well, number one, what's happening with the labor market is it's starting to inflect higher. And as I mentioned, because the consumer has been very strong, the consumer is 70% of the economy, and we want jobs to remain plentiful, and they have been. And even if the number comes in higher than the 250,000, even if it came in again at 260, it's still a very tight market. But we look for changes on the margin, Frank, as you know. Mm-hmm. And if the number is higher and we start to see this trend, we have to start to think about how that's going to impact the consumer overall.
All right, so Stephanie, I want to bounce something off of you. Yesterday, DoubleLine Capital CEO Jeffrey Gundlach, speaking with CNBC, he offered a warning over the Fed's plans for 2 more rate hikes this year and what he calls it signs of mania within the markets.
It leads to a valuation which is pretty scary with an inverted yield curve and the Fed raising interest rates or saying they're going to raise them further. The S&P 500 is a PE of 19 on a forward earnings basis. And if the economy weakens or goes into recession, those forward earnings are greatly exaggerated.
All right, so Stephanie, he's looking at some of the things you're looking at, just basically what direction we're going in with the market and some of the other macro factors outside of this huge run-up. So do you agree with him? Is the S&P overvalued? Do we have some real concerns about a big sell-off coming up?
Well, I think yesterday the Fed, quite hawkish, much more so than we expected. And when you look at some of the data points that we've been getting as of late, meaning inflation, we've actually seen it going in the right direction. The CPI headline at 4%, that's down from 9.1% peak. PPI at 1.1%, that's down from 11.7% at peak. So we're making the progress. Unfortunately for the Fed, they're saying it's still too high. In fact, Powell focused on the core PCE. We know that number came in at 4.9%, the last reading. They're expecting going forward it to be at 3.5. They want it at 2. So they are kind of staying stubbornly focused on this inflation, the inflation numbers. And yet they're not realizing that it's come down substantially and that we are going to actually slow down overall in the economy. So it was really a bit of a surprise. I don't know if it's doom and gloom, Frank, for the markets, because believe it or not, earnings have actually stayed pretty strong and better than expected. Right. And that is because the economy as a whole has been pretty good. The Atlanta Fed GDP now is looking at 2.2% growth. So I know we're going to slow because of all these hikes, but we have stayed really strong. And that brings me back to the consumer, because the consumer has stayed resilient. That's why we're going to watch these jobs, the job numbers and the initial claims numbers today.
Stephanie Link, bringing it full circle. So I want to get to your picks right now. One of them's in the healthcare sector. We saw a big sell-off because of UNH yesterday, but you're bullish on HCA Healthcare, ticker HCA.
Yes, well, higher utilization rates will help hospitals, right? And so that's a big positive. I also really like their M&A strategy. They're increasing their urgent care business. They made an acquisition just a couple of weeks ago, increasing their urgent care business by 15%. That's higher growth, Frank. That's higher margins as a result. Stocks at 15 times. I think very reasonable.
All right, and also Zimmer Biomet Holdings, ticker ZBH.
And that's the same thing, right? Higher utilization rates. Right. For non-essential surgeries. That plays right into the hands of Zimmer, hips and knee replacements. The reconstruction market is growing at 14%. They're gaining market share. They're increasing their margins as well. A little more expensive than HCA at 18 times, but I still think pretty reasonable.